Welcome back. I'm Brandon, the HBAR Bull. Zep is doing some traveling today, so I'm going to be doing this one solo. Now, I do some contract work for the HBAR Foundation, but I don't do these weekly updates in any official capacity. I'm just coming to you personally to give you the latest in the Hedera ecosystem. But as always, none of this is financial advice. Use it for educational or entertainment purposes only. So we're going to be getting into a lot today. We have decentralized physical infrastructure. We're going to be getting into real-world asset tokenization, maybe some gaming, and a lot of other stuff as well. But we're going to start with payments. More specifically, one of the largest payments facilitators in the world, probably the largest in the world, Visa. They just announced a partnership with SKUx. Now, of course, we've covered SKUx in the past. I did a flash update on this news just yesterday. But here's some of the key points in the Visa SKUx news. As mentioned, Visa has signed an agreement with SKUx to accelerate their digital transformation for merchants and consumer packaged goods companies. And when I think of consumer packaged goods, Hedera Governing Council member Mondelez is at the top of the list. And of course, they're already working with SKUx as well. In this Visa partnership, they are initially focused on customer acquisition, loyalty, and customer care. As we've covered, SKUx is a payments platform with Hedera at the base of their tech stack. On the partnership, the president and founder of SKUx, Bobby Tinsley, said, "SKUx is privileged to announce our work with Visa as we expand upon what is already shaping up to be an incredible year of growth in 2024. SKUx is committed to driving unparalleled value and opportunities for our clients. We look forward to our success together." Now, it's great to see Hedera getting in on the infrastructure layer for companies like Visa. The success of this, of course, is going to be dependent on SKUx's execution, but I have all the faith in the world with the team that Bobby has put together. But we're starting to see a really interesting trend here. We're seeing these Web3 focused companies, these Web3 enablers, then being leveraged by the really big companies and big brands. We have examples of that with Archax tokenizing funds for Aberdeen and BlackRock. We have SKUx here working with Visa, but they're also working with Mondelez. We had Mio that we were talking about in recent weeks, and they are working with Baxter. And then finally, we have companies like Fresh Supply Co. that are working with Mastercard. We're going to be talking a little bit more about that here in a few minutes. But we also have the other side of the spectrum. We have big companies that are using Hedera directly, like ServiceNow and LG, Hyundai, and Avery Dennison. So what my question is for you is, does it matter? Does it matter if we have these Web3 enablers that are kind of the intermediary that are using Hedera, and then big brands and big companies and big enterprises using them? Or does it really need to be those big enterprises that are using it directly? Now, of course, I think we're probably going to see both of these, but it's just an interesting question to see which direction this is actually going to go. Either way, we're seeing an awful lot of success. Now, we talked about the largest credit card company in the world, Visa, but we also had the second largest credit card company, Mastercard, that also has some things that are going on that can be considered connected to Hedera. There has been several places where we've seen Hedera adjacent to Mastercard. First, we saw them alongside Hedera in the StraightSex stablecoin pilots that were done by the Singapore Monetary Authority. That was all the way back in 2022. But it goes back further than that. Mastercard isn't new to the DLT and blockchain space. As you would expect, they've been experimenting with this tech for years. In fact, they ran their own private blockchain called Mastercard Provenance. When they realized that private networks didn't have the benefits of public networks like Hedera, they decided to sunset that platform. But combining the tracking of a network like that with the payments was useful, and they did have users. The largest of which was Fresh Supply Co., for which the services Mastercard Provenance supplied had become an important part of their business. So to get these services, they decided to migrate to Hedera. Not only that, but not long after swapping over themselves, they built the Continuity API to make it easier for Mastercard Provenance users to swap over as well. And now we see advancements of Mastercard's multi-token network, and we see some familiar faces. Just to go back and explain what the Mastercard multi-token network is, they announced it in mid-2023, where they wanted a set of foundational capabilities designed to make transactions within digital assets and blockchain ecosystems secure, scalable, and interoperable, ultimately enabling more efficient payment and commerce applications. And they're focusing on 4 areas: trust in counterparties, trust in digital payment assets, trust in technology, and trust in consumer protections. And in this latest press release, as I mentioned, we saw some familiar faces. We saw Fresh Supply Co. in the mix, but also another team that's integrated Hedera, Invenium. So it doesn't take a stretch to realize that Hedera is likely going to be integral to the multi-token network. So it was great to see this week these two credit card behemoths connected to Hedera. One more tangential in the case of Mastercard, but one pretty direct. Visa and SKUx in that press release mentioned Hedera directly and how it was going to be used. So one thing I did notice was that this was not covered by either of the two major crypto media outlets, CoinDesk and Cointelegraph. I thought this was pretty important news, especially the Visa news. And we've seen other things like this. I actually put out a tweet mentioning the Visa news, mentioning what we've seen with Blockchain for Energy, the consortium with Hedera as the only layer one alongside Saudi Aramco, Chevron, Exxon, and more. Then what I talked about last week with WiseKey, transactional Internet of Things, and their Seal token, which seems like one of the most advanced DePIN projects in the world at this point. And finally, I mentioned EDF, one of the largest electricity producers in the world, having 3 projects they built on Hedera. One of them, the Hedge project, included Google. And I was just asking a simple question. How do they choose their stories? I believe their readership is most interested in how crypto is going to impact and change the world. And I think these stories have some of the most potential to do exactly that. Hopefully, we're going to see some more coverage from those media outlets in the future, but I just wanted to ask the question. All right, so we're going to change gears here. We're going to get into Shark Bites. I know we skipped last week because Rob Allen was at the Governing Council meeting, but we got some great questions from the community, and of course, Rob's insights are always invaluable. So let's check it out. Rob, welcome back. You've had a lot of impressive travels over the past couple of weeks. How are things going?
Well, yes, I went from Sydney to New York for the Governing Council meeting, and notwithstanding the jet lag today, I'm looking forward to getting into it.
All right, well then let's just dig right into it. So is there anything you'd like to tell us about the in-person Hedera Governing Council meeting that, of course, you attended just last week?
Yeah, it was great. I mean, it's always really good to get all the council members together. In fact, we had sort of 20-something, I think, of the 32. So, pretty impressive in-person meeting, 22 or so. But first, there was quite a lot of events in New York around that Governing Council meeting. The council meeting was only Thursday and Friday. I flew in at 6:30 p.m. on Tuesday night and went straight to a community meetup, which the Hedera marketing team had set up. And Mance and Lehman were there, and there were panels. So it was really good to finally meet some of the community members that I've been talking to for years in some ways. I walked in, I was a bit late because of the flight. Walked in, people shaking my hand saying, "Hey, Sharky," and, there was a really good vibe going on in there. And Mance and Lehman stayed right to the end. So it was great to see them, working the room and spending their time with the community members. I saw John Wingate from Bank Social there. We had Joey from the Earthlings team, which was great. I was sporting my Earthlings t-shirt. Captain Brando, Jim Nasser from Acor, Tim Popplewell, who's the new Toko representative from DLA Piper, and Tamara with her son, who's a huge advocate of Hedera, and her photography is amazing. And Kamal was there from THA, and so it was a really good vibe. Way too much pizza, but other than that, we were able to kind of really have a great engagement with the community. I love doing the meetups, and I've just started doing meetups here in Australia as well. We've got we had one up in the Gold Coast and Sydney, and we're going to do that every month going forward. So I do like answering the community questions. The people are there because they want to be there, and that's they don't come to throw stones or anything. They come because they want to contribute. And I found a few new projects there which I didn't even know about, which is always excellent to hear as well. I was dishing out the Earthlings pins. I had the HBAR Bull Earthlings pin on all week long. So through the Governing Council meeting, I was casting those around like candy as well. So I'm pretty sure that most of the Governing Council members are wearing Earthlings pins this week, including Mance. So yeah, that was good. That was Tuesday night. Wednesday was scheduled for the seminar in the afternoon. So there was an industry seminar based around real-world asset tokenization. So the morning was spent the leadership team. So we took the opportunity to bring the committee chairs and the Hedera board of directors together to discuss, matters of governance and things that we may need to change. And it was a really good session that will continue over the next month or so to discuss those matters. And then in the afternoon, we got into the seminar. I think there were 3 panels. There was an invited enterprise and corporates were invited. It was an invitation-only event. We had a really good panel that I was on that Eric Piscini moderated around real-world asset tokenization. Of course, we had Duncan Moyer there from Aberdeen and myself. I was talking about some of the stablecoin initiatives that have been implemented or are being implemented here in Australia and what AP Plus are doing, the real-world asset tokenization of carbon credits and how the Guardian is part of that ecosystem. And we also had an invited guest from Citibank. And I know that this has kind of created a frisson of interest in the community when those pictures were shared. She was there as an invited guest only. Let me just say that it wasn't. Don't read into that anything at all. She was. Each of the panels had a non-Hedera person on to provide a different perspective, and that lady was there for that purpose. So, sorry to everyone who thought that there's a kind of an immediate conclusion to be drawn from that. That's not the case, but actually, it was probably. It was a really good afternoon with all the panels discussing in quite a lot of depth the subject of real world asset tokenization. There was one on the regulatory stance. John Wingate actually moderated a panel with the credit union regulator, the equivalent of the SEC in the US, which was incredibly supportive of what Bank Social are doing. And we had our own governing council representative from DLA Piper, Christy Swartz there. So there were lots of really good panels, lots of really good discussion, and the audience clearly went away with a far better understanding of what Hedera is doing and in this space than they had before. So it was a very good afternoon. Then we went into the governing council itself. And so Thursday and Friday were the council sessions. They're just a little bit of an insight on how these things run. It was a big room. We had a lot of representatives there. We had the Hedera staff there and also Swells Labs representation. The first day was about kind of ecosystem updates and ecosystem partners and the operation of the of Hedera itself. So we had presentations from Shane Higdon from Foundation and Kamal Yousefi from THA, and Paolo and his team from the DLT Science Foundation. So each of the foundations had some time to present. And then we had committees. So each of the committees had a 20-minute slot to present, the objectives and the progress against those objectives for 2024. So I stood up and did the CorpCom one, of course, but we had MemCom and TechCom and CoinCom and Marketing Committee, Marcom. So those were all kind of in that first day. There was quite a lot of discussion and debate as well. And then there was a dinner and lots of networking in between. So as with all of these kind of events and conferences, the actual work is done in between sessions. So there's lots of time for networking, lots of time for people who are collaborating on projects maybe to discuss or to actually meet in person for the first time, or to ask behind closed doors what each of the council members is doing. So it was really, really good, very refreshing to meet some of the new council members and also to discuss what they're doing, or tell them what we're doing and find out ways to collaborate in future. The in-person meetings are really always really good for that. And then the second day is more forward-looking. So first day is kind of designed to be more of an update. And then the second day is more forward-looking. So there was quite a lot of ideation. So we broke out into kind of an unconference format where we ideated around things that we should be doing, things that we might be doing better. So there was a lot of time spent doing that. And then we go into executive sessions. So the governing council itself, all staff leave, everyone else leaves. So the council itself can discuss matters for the council. one of the things that really I was left with at the end of this, all these 2 days, was a kind of sense of engagement, a new sense of engagement, actually, from a lot of the new governing council members. That fresh blood had injected this kind of energy into the space. Charles Adkins was able to present almost a keynote, a vision statement of how he saw Hedera growing and expanding and changing over this next phase. That was very well received too. So, without talking to the actual details of what we talked about, the sense at the end was that we're entering this new phase. We're kind of entering a phase of growth and adoption, and we're facing up to some of the things and challenges that we need to do. Absolutely all behind the need to engage the developer community more, to build a far greater range of advocacy and support the developers of the community, and bring more developers in from other communities, not just the Web3 space, but the Web 2 space, which is 10 times, 100 times bigger than the fairly rarefied and small Web3 developer communities. So needing to tackle both of those. And, at the end, I personally came away with a sense that, we're at the start of a brand new phase of growth and an adoption, which we absolutely have to do as we kind of lean into, this next part of the whole crypto cycle. So largely positive from the as a personal report from New York last week.
Oh, Rob, that's what we want to hear. It's great to see the governing council pretty much acting as designed, doing what they need to do to make sure that the vision is coming to fruition.
Absolutely.
So we are going to jump into some questions here from the community. The first one comes from our friend, the HBAR Barbarian himself. He asks, could SKUx, Transactional Internet of Things, dwarf Atma's TPS? So, Rob, I covered this in fairly deep detail last week. Essentially, there's this entity called WiseKey, and they've already launched 19 satellites. One of their subsidiaries, WiseSats. There's 19 Pico satellites that are in orbit right now, and they're designed specifically for DePIN, decentralized physical infrastructure. There's going to be land stations as well, and then there's going to be sensors in Internet of Things stuff, autonomous vehicles, smart cities, smart homes. So if you have your dishwasher and your dishwasher decides it needs some new detergent, it can order that directly off of Amazon, something along those lines. I'm not saying that's what's going to happen right off the bat, but that's the vision for the future of this kind of decentralized physical infrastructure. And one of the things that really impressed me about this is that we already have an entity in WiseKey and WiseSat that already has the resources, pretty substantial resources, to be able to do things like put satellites into orbit with SpaceX today. That's already been done. But Rob, I know the big key around this is their token, the SEAL token, is going to be the payments rail that is going to facilitate these payments between Internet of Things, transactional Internet of Things. And Rob, I know you are the payments guy. We have been talking about Internet of Things and smart cities for years now. Yeah. I wanted to get your thoughts on it. What do you think about what we're seeing come out of WiseKey?
It's incredible, isn't it? I was well aware of WiseKey and what the Hashgraph Association was doing with them when I was there, and it's even greater than I had imagined. To be honest, why is everyone not talking about this? These are satellites, right? We're launching satellites. We've got a token economy designed to leverage an IoT network. We're talking about DePIN pretty much every week now, with everything that Neuron's doing, and now the WiseKey and its satellites. There's this link between, the WiseKey and Elon Musk, and SpaceX. So, I mean, it's just incredible amount of scale that no one's talking about because I guess, crypto is crypto. So, but it's a huge, huge deal. So micropayments between IoT devices is going to dwarf everything. There is no doubt about that in my mind. The micropayments infrastructures that support IoT scale, and the billions of devices that are probably a magnitude more than that will permeate every part of society in the not too distant future, need ways to incentivize. They need people need to be incentivized to run gateways. If you've got LoRaWAN type networks on the ground, then you need gateways for them. Now we're talking about satellites and pico satellites. These aren't just dumb devices. There's, we refer to the identity of things. All of these little elements have their own digital identity, so there's an identity aspect to this, and there's a payment aspect to this. And there's a network aspect to it. It's perfect, right? It's absolutely perfect. This is what Hedera was designed for, in my mind. We talk about micropayments. These are kind of tiny, tiny, tiny payments, which we probably need to think quite hard about how Hedera can be applied at that end of the scale without, impacting the other end of the scale. And so architecturally we're there, but do we need shards? Do we need, some other kind of layer 2, or will Hedera mainnet support, as it currently stands, that degree of scale? That's a very exciting conversation to have. And, we know that we're tracking towards shards. We know that we're tracking towards state proofs that require, that. There is there's a case for layer 2 or some kind of privacy layer on top of Hedera, which, is an open discussion as well at the moment. So, these architectural evolutionary aspects are actually the technical level of what I was saying earlier of this new phase. Now we're getting adoption. Now we're getting these projects that are visionary, way beyond the simple use cases of HCS and token service and, NFTs and DeFi. Actually, deep in is infrastructure writ large. It's everywhere. And potentially this is the killer set of use cases that which really establishes Hedera. And the fact that an organization like you say, WiseKey, is adopting Hedera with this vision in mind, does truly blow my mind. So yeah, I think it will absolutely dwarf the number of transactions that we're seeing, and this kind of Avery Dennison Atma use case, which is an amazing use case. But we always knew that once we start to scale, it goes exponential. So yeah, I'm sure Lehman and the Swirlds Labs teams are kind of super excited, but also, very focused on how the network will be able to support that scale. We know it will, but there are a few elements that need to be in place in order to do it.
Rob, you mentioned you're amazed that nobody's talking about this yet. You would think, forward looking in the media, things like that this would kind of be a story that they would want to cover. But when do you think it's going to be kind of so big that they can't ignore it?
The problem, as we've seen, I think, recently with the crypto press, and the coverage from the areas that are focused on a particular part of Web3, it is largely down to those who are reporting, those who are influencing, are very focused in a particular area. They don't necessarily think or know or even comprehend what infrastructure means, what traditional asset management, traditional infrastructural asset management, and traditional infrastructural delivery looks like. It's just too big, and so they are able to focus in their little Web3
on meme coins.
On meme coins. And of course, they're incentivized in a particular way and report in a particular way, largely without necessarily always the integrity that one would expect of true journalism. So I think we need to look to the wider press and the traditional areas, the use cases that the areas that support the use cases that we're looking to innovate and disrupt. We don't stay in that rarefied little echo chamber that is, Cointelegraph or CoinDesk or those the normal outlets for meme coin news. We look to all the other trade press platforms, and over time that will grow. Now, of course, we need to balance the two things, but it will come, right? I know it's not coming soon enough for most of the community, but it will certainly come. And then it will, then it's almost game over at that point, because once it's there, there's no stopping it. So all we need to do is to keep the pressure on, make sure that we know, and then those people that we know in the community tell people outside the community. And it's not about coming and buying the new meme coin. It's actually, did you realize that in energy or in physical infrastructure or in supply chain, Hedera is best in class for these reasons? Because there's a lot more people in the world than just the crypto bros, right? And so the real use cases, the real world kind of use of Hedera will come over time, and it'll give competitive advantage to those enterprises that adopt it once it's proven. And it takes time, but the tipping point it feels like the tipping point is very close.
I'd have to agree. That's fair enough. So speaking of competitive advantage, we have another question. We're going to try to do these next questions kind of in rapid fire to try to get some of them knocked out. This one comes from DK33, who says, while HBARbarians look for nuggets of info and new governing council, is it accurate to say Hedera specifically gives the company using Hedera a competitive advantage? So it's not in the company's best interest to announce they're using Hedera lest they be copied by competitors in their industry. So what are your thoughts?
Well, yeah, the easy answer is yes. If we do it in rapid fire, then absolutely yes. I think every company has its own, media strategy, its own comm strategy. Many who are publicly listed need to be very careful about what they announce to the market as well. And, if they're listed on a stock exchange, then there are rules about what you should announce and the timeframes in which you should announce them. So you have whole media and public relations teams kind of crawling all over everything that gets said. So it's usually easier to say nothing until you've got something to say. Unlike, the startup world where you have to say everything because you're constantly in a cycle of raising funds. So Sure. Building that buzz around the business is key. So, that's the difference between enterprise and startup. You're very, very constrained about what you say if you're a publicly listed company. But of course, yes, there is an aspect which you don't need to play your cards too early. You play them very close to your chest until such time as that competitive advantage can be revealed, and sometimes it won't be revealed. It will just be demonstrated through a better performance in the market, and because you don't really want the competitors to know what you're doing. So yeah, I think it's fair enough.
Yeah, makes sense. All right, so the next one comes from Andrew Garcia, who asks, is there any way you can explain the timeline on the governing council? What happens when these big names leave the council due to the 2-term limit? Thank you.
Yeah, so it's quite simple. We're not quite there yet because we haven't filled the council, but when the council is full, and we're absolutely anticipating filling it hopefully this year, if not within the next year. The membership committee, MEMCOM, which is currently focused on recruiting and processing and bringing on board the new governing council members, will switch to a function which is about assessment of the council members and their performance, as well as managing the pipeline of those in the waiting room, if you like. So that's going to be a very interesting time, I think. Assessing who should be renewed, for their second term, and also the transition at the end of their second term, because no one has ever suggested that there should be any change to that within the Hedera LLC agreement has it enshrined that we only have 2-3 year terms, and the second term is on merit. So until we have a full council, then it's a tough case to make, especially so early in the kind of the life cycle of this technology to roll off governing council members. But there'll be a very strong focus on performance and engagement and delivery when we get to that point. So it will be very interesting, and we're fairly close to that. I think within this cycle. So we've had our first 13 kind of rolled forward for their second term. That was voted on in December. So we're in that second cycle for the first batch, and then as we fill up the council and we have a waiting list, we'll start running that process. Very excited about seeing what happens, and the membership committee are already kind of working on what that looks like.
And the pipeline, you were just at that council member meeting. What's the
Hmm.
pipeline look like right now? Still pretty good?
Yeah, well, I'm on the membership committee, so it's as good as it was when I was last asked. But there are a couple of new names actually on it that have come out of one of the foundations, let's say the associations dealings, and yeah, and they're added to the pipeline. So there's some nice big names on the list, and but we are quite focused actually in Memcom on filling the gaps in the sectors, right? So, our strength in the Governing Council is actually that we are truly decentralized because we are not only cross geography and cross time zones, and we're cross sector. And we recently had Mondelez come because the consumer goods, packaged consumer goods, and what they're doing was one of those areas that we didn't have. There are a couple of gaps that we're looking for. NGOs, for example, we have no NGOs, and we dearly love to get those on. There's actually quite a good debate on how we might engage with NGOs last week in New York in order to bring them on. I forget the other gaps, but we've got a couple of gaps that we would fill rather than
Auto.
add.
I want to see auto.
Oh yeah, yeah, yeah. I'd like to see auto as well. So there are some. Yeah, I can't say anymore. But yes, we've got a healthy pipeline.
All right, fair enough. All right, so the last one we have is from Hedarian Z, who asks, question for the next Shark Bites. Rob, do you know of any instances of private distributed ledger networks being built with the intention of using HCS for the consensus mechanism?
Yeah, so we've had these plugins for a number of years, actually. The one of the contributions to our code base by IBM. I think Brian Goss was one of IBM's first governing council member. His name is on the white paper for the Hyperledger plugin. So we have these plugins which allow for private permission ledgers to plug into HCS and benefit from the consensus and the security of the mainnet. Private permissioned ledgers tend to have round robin or leader led blockchains. They don't have crypto to secure their networks, so there are a different mechanism. So the idea around the plugin was that you have a private permissioned ledger, which is distributed database with some kind of auto-executing code in it, which was all the rage back in 2016, 2017. But there aren't that many of them surviving, actually. A lot of the Hyperledger Fabric implementations, the IBM blockchain implementations that were based on Hyperledger Fabric, have actually failed, or they've gone to the wall. There's been not many. I think the Maersk project with IBM, the Walmart Food Trust one, I think it was, Everledger here in Australia. There's a number of them that we trade actually in Europe. They have struggled to find their niche because private permissioned blockchain is little more than a distributed database and collaboration between a consortium. And there's quite a lot of heavy lifting to be done to kind of manage a business like that. It's not really a technological solution. It's just managing the consortium. So there aren't that many private permissioned blockchain businesses or implementations that I think are particularly successful. So in addition to Hyperledger Fabric and the plugin, which enabled the Hedera Consensus Service to be used to kind of anchor that security, to make the private permissioned ledger more secure, we also had one, I think, for Corda and others. They haven't really, to my knowledge, they haven't been utilized as well as they might. I don't really know why that is. I've had my own experiences with Hyperledger Fabric and have largely discounted it as an architecture for the things that I want to build. I prefer the AppNet architecture. I like the idea that by design, Hedera can have effectively a layer 2 of AppNet nodes that are kept in sync and anchored with the mainnet. I think that's a very underrated architecture, which I'd like to see a lot more of. And there are a few of the governing council members and other enterprises looking at that architecture. So, we have options. Now, as we go into this next phase, I think we will see, and because we're fully open source, the Hedera network's fully open source, I actually think we'll see some special purpose layer 2s or kind of private Hedera networks or special purpose shards that will evolve. We just talked about WiseKey and SealSQ. I think IoT networks are an ideal kind of scenario for that kind of architecture. I think we'll also see that there's a persistence in enterprise that privacy is everything, and for privacy, which of course is true, and confidentiality and customer data and commercial data, but that doesn't always necessitate a private permission blockchain. There's some kind of privacy layer on top of the public network that would be beneficial to those use cases. So I think we'll see those things evolve as well. But it's pretty exciting. That wasn't a quick fire answer, but the quick fire answer is I'm not aware of any who are in production that implement that private permission layer plugging into the Hedera network. But the mere fact that was possible and the AppNet architecture is possible is driving a lot of architectural discussions around what the best design for these things might be.
Yeah, it's going to be a wild ride to see what works out. Rob, That's all we have for you this week. We had some great questions from the community. Of course, your insights are always invaluable for us. We want everybody to continue to drop those questions down below so we can keep this thing going. Rob, that's all we have. We'll see you next week.
Thank you. Keep those questions coming. I'll see you next week. Cheers.
So there in the beginning, Rob did mention Neuron. We have two major players in the decentralized physical infrastructure space. Of course, WiseKey, as Rob talked about, and then we have Neuron. And Neuron is expanding their beta program for anybody that might be interested. They said in a tweet, due to a huge number of applications, we have spoken to the manufacturer and have secured another delivery of sensors. Now, these are land-based sensors that are in the future going to allow Neuron to follow all of the use cases, starting with their aviation and drone use cases. So this is going to allow them to double the number of beta program participants to 60, and they want you to check your emails for onboarding information. They also followed up saying that anybody that might have applied to this point should have gotten an email. So if you haven't gotten it, check those spam folders. All right, next up, I did promise that we were going to get into some real-world asset tokenization, and we caught up with Jeremy from Cask Capital that is taking it in a completely different direction. So let's listen to what he had to say. Jeremy, before we get into the Web3 side of things, can you tell us a little bit about your core business?
Yeah, of course. So our core business, Cask Capital, is whiskey cask, as it said. So our goal is to make whiskey cask investment a easy and transparent asset class. There are a lot of traditional use cases at the moment with traditional whiskey investment companies. However, we've noticed as whiskey enthusiastic people that there are a lot of hurdles over there, and it's hard to get in. The prices are pretty steep, and we, as a lean business, we want to compete with them and make it accessible.
All right. So what brought you to Hedera, and how are you using the network to help your business?
So how we came to Hedera, we got connected to the Materium platform, Materium.io. They're a marketplace provider who have integrated the tokenization engine. We got introduced to them with the support of the Hashgraph Association, whom we have close contact with during the last few months to launch the first Scotch tokenized marketplace for Scotch whiskey on the Hedera network. Well, one of the main reasons we chose Hedera is, for me, who's been involved in the blockchain industry since early 2016, it was a high priority to build the product, the marketplace, on a layer one. Of course, most blockchain developers, they go for Ethereum. However, with experience that I have, I know that Ethereum isn't always the most practical chain to build on. So our focus was to find a layer one who is reliable, who has like amazing transaction speed, and where the costs are also like steadily low, barely neglectable to actually be attractive to buyers of whiskey cask.
So, who exactly right now, you are selling full casks of whiskey, and that can be pretty expensive. Who are your customers?
At the moment, so our whole front end on the marketplace is focused on the traditional e-commerce market. It's like a traditional e-commerce marketplace built on Hedera. What we wanted to achieve is to be accessible to everybody, basically. So we're not focused on a traditional crypto Web3 audience. Our whole front end is basically paying with fiat. You have to pay with British pounds, which is obligated for us because we're licensed in the UK, so we need to accept pounds as payment. But our audience at the moment is basically everyone who's seeking for an alternative asset class, which is uncorrelated to traditional asset classes, but also way less volatile than a cryptocurrencies that people are used to investing in the crypto industry. So actually what we're trying to create is the sweet middle spot for investors on both sides of the spectrum, the traditional stock investors, real estate investors, but also the more exciting adventure seeking investors who are active in the Web3 industry.
Yeah, that makes sense. So what are your longer term goals for Cask Capital?
Cask Capital is aiming to build multiple financial products on the blockchain with whiskey cask as the underlying asset. So we launched a tokenized marketplace at first. We are very eager to expand with fractionalization because we know that casks are expensive. Even the new make whiskey cask that we currently have on the marketplace, they still start at £2,400 for one cask. So it's quite steep. So we want to make it accessible. That's our goal, make it accessible to a broad audience. Once we have the license to actually fractionalize, or once we found a partner who can fractionalize it for us, we want to start focusing on other type of products. Think about indices, maybe ETF kind of products, or maybe in the long-term future, we can build options or derivative based on the blockchain, but using the whiskey cask as the underlying asset, because whiskey cask, they appreciate very steadily between 10 up to 15% annually. So it's a very interesting asset class. The thing is, there aren't financial products built for it. And with blockchain, we can do that.
Well, that's exactly what we want to hear. We know how important real-world asset tokenization is, and we're seeing a lot of that on Hedera. We certainly welcome you to this space. We appreciate you doing this in a completely different direction. Thanks for coming on, telling us about Cask Capital, and good luck.
My pleasure. My pleasure. Thanks for having us on, and we look forward to showing the Hedera community and the Hedera ecosystem what's coming for the next few months, the next few years.
Now, I love to see this real-world asset tokenization on Hedera in completely new directions that I hadn't even thought of. They did mention to me that they want to do that fractionalization, but that takes several more steps to do it in a regulatory compliant way, but they do want to get there. And of course, that democratizes a whole new asset class. So it's going to be fun to watch how all that rolls out. Another thing that I wanted to mention, we're going to go in a different direction and get into a different type of tokenization, and that's with the PAC token from Hashpack. They are going to be launching their token on May 22nd at 8 a.m. Pacific, so 11 a.m. Eastern. They want to make sure that you associate that token 0.0.4794920, and they go on to explain what's going to happen on that day, the creation of the PAC HBAR liquidity pool on SaucerSwap. They have a few centralized exchange listings, and then a one-time distribution of the PAC token to all eligible accounts. And for all of those who have concierge collectibles, the snapshot has already been taken earlier today at 10 a.m. Eastern. And another team that had a successful INO around the same time that Hashpack had theirs was Earthlings, and they had an amazing trailer that just came out recently, and I wanted to make sure that everybody saw it.
Now listen up, I'll explain it one more time. Pepper will probably make her move from here to here. That is where you come in. You silently position yourself here. At that time, I will make my move and enter the scene where she will try to make a run for it, but you will be there to block her exit. And that is where I finish the job. She'll stand no chance. Got that? Chicken!
What the? Oops.
And sticking with consumer engagement, everybody that has the Karate Combat app, go into your wallets, check out the NFTs, and if you're in the top 1,000 players, you're going to be able to claim an NFT. They were all created with AI based off of your name, and we saw some pretty cool ones. I am the Silver Bull on there, and this is the one that they created for me. And longtime HBAR Barian Rebecca has pretty much my favorite. Her name in the Karate Combat app is Karate Mommy, and this is the one that got spun up for her. All right, we're going to shift gears here again. We're going to get into some outside capital that has been attracted to the Hedera ecosystem. So the Hashgraph Association has again partnered with a sovereign wealth fund in the Middle East. This time it's the Qatar Economic Forum to form a digital assets venture studio in Qatar. The Hedera Governing Council is going to be kicking in $10 million to this fund, and the Qatar Economic Forum is going to be supplying $40 million. This is very similar to what we saw come out of the Ministry of Investment of Saudi Arabia, where they kicked in $200 million to the Hashgraph Association's $50 million. So attracting this kind of outside capital is going to be critical for the Hedera ecosystem to continue growing, and we see the Hashgraph Association seems to be leading in that department, so we appreciate all their efforts. We're going to shift gears here again. We're going to talk to a community member. Now, that's what the Hedera Forum, when I first started doing some of these videos, that was the intent, to talk to community members, talk to builders about what they were doing. We shifted over and started to talk to a lot of other people as well, but we caught up with DJ of the Lazy Superheroes to talk about his project, but also some of the really cool tooling that they've brought to market. It was a really interesting conversation, and I think you're going to like it. DJ, so what did your journey look like that brought you to Hedera?
The Web3 journey is a long and torrid one, but I originally was an app developer in a prior life, and I moved away from that for a decade plus, and then always had an interest, right? I used to do data science type stuff, and I've been following along blockchain tech since the fairly early days. Let's call it 2012. Not in more of a skeptical guise, perhaps, and fell in love and out of love with various chains on the way. And Hedera was probably the first that I read the white paper and went, oh, that'll do it. I like that. So, early convert there. Couldn't wait until mainnet launch. Missed the SAFT because I got it stuck in my spam email box. Happens. In actual fact, that was probably better for me because obviously when mainnet launched, the price promptly got dumped on, and it visited 1 cent, and I got to be part of the 1 cent club. So happy with that. Clearly was far too cautious, doing other things, not paying enough attention, blah, blah, blah. And then watched it. I even used to write a little bit of an amateur newsletter that hung about the place amongst peers. I worked in TradFi, so you used to send that round to people in the markets. They humored me, pretended that they read it, but it got longer and longer. And then the NFT world came out. I remember that being there for the first days before we even had the NFT standard, and those were very strange days indeed. Looking back, a lot of history now seen. I thought to myself, I used to be a dev, maybe I can pick this stuff up again. So yeah, that was it. I came out of, well, not entire retirement. I mean, I was always doing stuff with the data science side, but I wasn't really a JavaScript guy. And so, donned that hat, JavaScript, Solidity, and now, we're pushing forward, right? We've written scripts and tooling. I've helped, I don't know how many projects now, including very specifically Lazy Superheroes, but we continue to help creators as well as pushing our project forward. And we keep trying to do things in what we consider to be the Web3 decentralized, trust minimized, ideally trustless manner where possible. Not because you shouldn't be able to trust me. Hopefully people who know me and my backstory would think I am trustworthy, but I don't think you should have to trust me. I am ever more excited as time goes on. It's clearly thoughtful people at all ends of the spectrum here, and it may not be easy, but we are really seeing great progress. And huge proponent of seeing a full EVM deployed on Hedera. I've learned a lot of lessons, shared a lot of them with other parts of the dev community, but it's pretty magical to watch it work from instead of developing over on the Ethereum side. So that's what got me here.
Well, DJ, we've had kind of a similar story. I started out as an investor, started off as a SAFT investor, but got most of my HBAR as it made that dip in the end of 2019, beginning of 2020. I'm a proud one center as well. But yeah, it's fun to hear everybody's story, how they got into it. And you're certainly an OG. But, talking about, you mentioned, you're part of Lazy Superheroes. It's an NFT project. It's so critical to have community in an NFT project. So I'm kind of curious about your thoughts on building community and the community that we have in the Hedera ecosystem.
Sure. So I have two prongs to that answer, but NFTs as a medium to build community is a fantastic piece. The identity, attachment, belonging that it and in the world as it develops, I mean, that's a broader societal comment. There is a desire for collective belonging, and NFTs and communities online really can fill that. And it's been very noticeable. Of course, Lazy Superheroes Gen 1, I mean, day one, I was a collector. I was not involved in the project on the other side. So I was fortunate enough in the initial crazy sellout that happened there for the 100 slots to get one and be part of it and see the very early days of Hedera NFTs grow. And I'd say Lazy Superheroes is not only about the core community, of which Gen 1 hugely are, Gen 2, also the ancillary pieces of the broader universe, like the hash horses. Right? So we try and do things at all levels. Like for the hash horses, we built a little horse racing bot inside, and we often get 50 plus people turn up to watch the horse race, and we tied that in. So this was the other prong of the argument. Over at Lazy Superheroes, we built the HTS bot. I don't know if you dabble in all of the Discords, but the likely odds are if you have NFTs and you're given roles based off the NFTs you own, then that's something I built back in the day because we needed it. And there was one solution. Someone was offered to sell it to me for $15,000 or $20,000, and I said, that's crazy. I'll build one. And so we built it. And I'm an ex-dev with a software architecture background, so I tried to build it scalably. And now we have 230 Discord servers running. So most of the Hedera NFT space uses Lazy Superhero tech, whether they know it or not. So lots of cool stuff we can do with that. If we write the horse racer bot, well, it checks what horses you own, so you get to see your horse randomly selected. Little touches, little extra things you can do. We've helped every community from the smallest one who's just launched and has no real clue what they're doing, through to the HTS bots in the Hashback one, or the Earthlings, as I see your shirt. So it's all over the place, and we do this not for just to be helpful, right? We're all in this together. NFT stuff, some releases, some alt arts, the comic books, the merch, the physical comics, the storyline. I mean, Lazy Superheroes is a story-led narrative arc, and NFTs are just one part of that medium on an original IP. But also the tech tools, the swaps, the missions which have been rewritten in testnet and about to deploy when the other part of the technical duo, Baptiste, comes back. We'll get that out live with F1. Finally, the long-awaited staking there. But again, when we do these things, we don't do them by half measure. We can do them quicker and a lot easier by half measure. And at the risk of insulting people, when I say half measure, I mean in a centralized manner. Like, send your NFT to me and I will call it staking and I will airdrop you something in exchange. No. We are sending this to a smart contract where the only person who can ever get it out is you, not me. If you are staking to earn an NFT, you know that the NFT is there before you begin. So at the other end, like, I don't know which one I'll get because it's randomized. Again, on-chain randomness in Solidity, thanks to Hedera. But all this stuff is handled by the brain in the EVM. I am now quoted in multiple Discords, I've seen it, that my favorite quote, Web3 equals choices, make good ones. It's up to you. I mean, the way we want to do it is this way, and we think it's the right way, and we think it's the way that if we can onboard other chains over here, they will recognize. And that's really important, and important to us. But it isn't the easy way. I'll tell you that for sure.
Well, DJ, you've mentioned your project Lazy Superheroes. I'd like to pinpoint specifically on what you're working on.
Sure.
You've created some great tooling, but I'm curious as to what you've built around this brand. So tell us about Lazy Superheroes.
So we have our original heroes as represented by the Gen 1 themselves. They have one comic book out right now, so the story has begun to be developed. It is far from finished. The second one is on sketch paper, but hasn't been sent to be inked up and drawn yet. But it is on its way. Gen 2 was the second generation that released a number more, perhaps not as well-known heroes, but heroes nonetheless. So we had 5 more heroes there, and also introduced the lazy supervillains, the arch nemesis of the heroes. These are heroes who have let themselves go, right? They're a little lazy. They're not quite as good as they once were, but still useful in their way. And if anyone is interested, I'm sure we can link the white paper. Show all the roadmap off, but also the comic book. If you want to read it, take a read, love feedback. There are not only the comic book, but there's alternative art covers. There's also alt endings out there. So there are different things. We try and lean into that because, again, we think that NFTs are a medium. Like, they're a really useful medium. You can do great things with them, but you got to have something to hang your hat on for why you're here, right? And hopefully the original art matters to people. On that note, what we're doing right now is we are attempting to upgrade the art. So the Gen 2 art never sat as well, if we're honest. Like, we got it going. We were under the cost to get it out the door. It was okay, but we've lived with it now for a while, and good long while. And it doesn't do it justice to the project, and it's never been loved as much as the Gen 1 art. And many people in the Hedera ecosystem know Ordinary Guy and his artwork. And we have had him rebuild all of these layers by hand for these characters, and a massive upgrade. And it's huge, it's ginormous. But what we are going to try and do is swap out the tokens for people live on the same token ID, which makes this a lot trickier to do. Some shenanigans and finagling, but we are right about there. And again, that will be via a smart contract. So you will go to the D app and you will be able to select which ones you want to swap out, hopefully all of them. And you'll click some buttons to grant some allowances, and it will take them off you, deliver you back new ones, which will still have Easter egg surprise that no one knows yet, your original art embedded in them, so that you still know that yours were the OG ones. And you'll be able to continue on. And importantly, same token ID, so it'll work in all of our other systems. So we have a token, the lazy token. That lazy token is a decentralized issued fungible token. So it's a smart contract, it's the treasury, not the team wallet. The team always uses multi-sigs to lock everything down. We take this stuff very seriously up front. We use Solidity to make everything composable so that we can hook all these different pieces together as we really build out this architecture. And we have some great pieces of that puzzle ready to go live. We have a whole suite of tooling. We have this token. Don't be surprised to find out things cost lazy tokens. It's a deflationary token. The more tools we have, the more usage there is, the lower the supply, the better it is for all of our holders. You can take these lazy superheroes and stake them in a smart contract and earn lazy for free. And spend it in various ways, whether that's consulting fees, like if you want me to help you deploy a new bot or some access or an explainer of how some smart contract works, we're available for that. Like we like to stand on the shoulders of others where we can, and we like others to stand on our shoulders, right? Take what we've done and elevate it, because we know that the Hedera NFT ecosystem is pretty small. Again, I told you, we put together the HTS bot, so I know how many users exactly there are across over 200 discords. So I watch that like a hawk. At the point where that goes up to a factor of 10 larger, I know that we'll be a real ecosystem for NFTs. But for now, we're growing steadily but slowly. And so, trying to play along as we can and do our part to make the space better.
Oh, DJ, I love to hear the stories of community members that have come in, even more so if they become builders as well, and you've done a great job doing that. Thanks for building on Hedera and coming on today and telling us about it.
Very welcome. Good to chat.
It was really nice talking to DJ, and their Gen 2 for Lazy Superheroes has launched, and I think it made it into the top 10 as far as NFTs go. So with that, we'll jump into some network analysis. We're still processing about 1,600 transactions per second on the Hedera network, which has us processing just under 1 billion transactions per week. We saw a max TPS of 6,900 over the past 7 days, and we're maintaining a time to consensus finality of just about 3.5 seconds. One highlight this week is there's been an impressive 157,000 accounts created just in the past 7 days. Looking at our fungible tokens, the top spot once again is Wrapped HBAR, even though it's not displaying properly on Metrica right now. Dovu is up next, followed by BLK, Sauce, Native USDC, and Karate. The top 10 is rounded out by Energy Trade Token, Qwerty, the meme coin Unlucky, and one I don't know much about called Silkworm. Moving down to our NFTs, the 2024 Road Code Access card took the top spot, followed by the H-Liquidity Transformer NFT, Saucer Swap's LP token, an Earthlings Land NFT, Hashpack's INO token. And next up we see Lazy Superheroes Gen 2 that we were talking about, the Not a Slime World NFT, a Lithos Rant CPU NFT, Kabila's Welcome token, and finally Doctor Who Worlds Apart. And with that, we'll dive into some DeFi. The total value locked in the Hedera DeFi space is sitting at $110 million. $103 million of that is coming from Saucer Swap. HSuite is still sitting at $5 million in TVL, and HelloSwap is at $2.27 million. Stater liquid staking doesn't count in the normally reported TVL figures, but the Stater value did increase by nearly 70% after the HBAR Foundation refunded that program. Moving over to the crypto and HBAR markets, Bitcoin is up 2.5% on the day and 9% on the week to $66,700. HBAR is up about 5% on the day and 8% on the week to about 11.5 cents. 10.5 cents seems to be offering some support, and we have resistance at 12 cents. I still think 14 cents will be a critical level going forward as well. So as we wrap things up this week, I just know that my imagination has been captured by things like WiseKey and their transactional Internet of Things. Visa, of course, we've always had the expectation that Hedera could do amazing things in the payment space, and we're seeing that start to gain traction. I'm just curious, what other networks are you seeing that have these kind of use cases that are actually starting to come to fruition? I'd really like to know what else is out there. So coming up next week, I am going to try to get Bonzo Finance. We're going to start to see lending coming to the Hedera network. We are going to get Neuron on early in the week. I'm also going to start to take all these individual videos, all these individual interviews, and post them to my channel so we can kind of have a repository of all these different interviews. I'm also going to have a space next week. Hopefully that one's going to be on interoperability. We're going to get Axelar and Hashport on, and of course we're going to get Rob back for Shark Bites. So if you have any questions for him, make sure you drop those down in the comments. That's all we have. We'll see you next week.